Hi, this is Andy Hoffman of CryptoGoldCentral.com, the sound money blog of the 21st century, which shortly I'll be making an exciting announcement about of a new service I aim to launch in the very near term. If you'd like to set up a cryptocurrency consultation, please contact me at ahoffman@CryptoGoldCentral.com. Now, before I get to today's topics, I'd like to discuss the tweet storm I published last night in the wake of yet another Bitcoin price plunge, which interestingly found very strong support at the key round number of 8,000. Not that this means anything in the big picture, as I'll discuss momentarily. However, the fact that sentiment remains so low, with bearishness at levels not seen since the height of last year's scaling debate fears, and investor interest at levels not seen since before the 2016 halving, despite prices over $8,000, tells me how far Bitcoin has come and how positive these anecdotal indicators are. In the tweet storm, I bared my emotional soul, so to speak, in looking at myself in the mirror and realizing my modus operandi is becoming, in some ways, counterproductive. I've not stopped analyzing and communicating cryptocurrency fundamentals, which I am very proud of. However, in stepping up my attacks on Bitcoin FUD, that is, my subjective interpretation of it, I'm not accomplishing anything that helps Bitcoin advance or changes the opinions of others. Given that I have no control over Bitcoin's price or people's emotions, beliefs, or investment decisions, I'm rethinking how I spend my time. As unlike precious metals, where, as the marketing director of a bullion dealer, I was paid to combat FUD, I have no such obligation here. Thus, I'm only bringing undue stress onto myself at a time when, recent correction notwithstanding, I should be embracing Bitcoin's positive more and fighting its detractors less. As in my very strong view, while there's no way of knowing what will happen tomorrow, the odds of Bitcoin succeeding have never been higher, and of it failing as close to zero as you can get. That said, let's get back to fundamentals, which unfortunately don't necessarily correlate with price movements in the short term, as evidenced by last year's meteoric price growth amidst a period of maximum uncertainty, versus this year's dramatic price declines despite not a shred of negative news to explain it. Yes, I know that's a very simplistic explanation of price movements, but in the big picture, the point I'm making is simply that prices move when they move, oftentimes without regard for when traditional analytic methods say they should, particularly when non-fundamental factors like the Mt. Gox trustee become short-term variables, as they decidedly are today. In this case, so dominating, the title of last week's Crypto Audioblog was, Will the Mt. Gox trustee be the biggest Bitcoin story of 2018? As for said non-fundamental factor, as discussed on yesterday's one-on-one podcast in great detail, I am convinced this is the principal reason for Bitcoin's price decline from $10,000. Clearly, the 24,000 Bitcoin withdrawn from the Gox trustee's wallet on April 25th and May 10th have been serially dumped on the market, with the May 10th wallet withdrawals occurring mere hours before the seemingly out-of-the-blue price plunge from 9,400 to the low 8,000s. As I put it, the borderline malicious lack of transparency in his selling, to the point of suggesting conspiracy theory, has created significant market uncertainty as to, one, how much of the 24,000 Bitcoin have been sold, and two, when the remaining 137,000 will follow, which I might add only amounts to $1.2 billion of Bitcoin that, if any semblance of transparency was utilized, would likely result in much higher sale prices. Fortunately, the lawsuit is likely to dramatically advance in the coming months, with a strong possibility of being resolved by year-end, at which point the market will start to stand firmer in its price support, knowing full well the end of this non-fundamental selling of what amounts to insignificant dollar amounts is nigh. Unfortunately, at the moment, there's simply no way of knowing his modus operandi, and in a market in which significant skittishness remains, with investor sentiment still extremely weak as we scratch and claw out of the winter's ugly bear market, such uncertainty is causing significant price pressure from traders fearful that at any moment the next Mt. Gox wallet withdrawal will occur. Otherwise, I as usual see not a shred of negative news to speak of. This week's Consensus Blockchain Conference, which in the big picture is a meaningless event, was widely hoped to spur dramatic crypto price increases. However, care of the Mt. Gox trustee FUD, as well as the fact that, practically speaking, there's no reason to believe the mere occurrence of a conference should make prices rise, this did not occur, prompting many to believe Bitcoin's outlook has weakened. To the contrary, the technology advancements discussed at Consensus were incredible. And with Bcash proving yet again what a joke it is by hard forking to 32 megabyte blocks at a time when its average block size is close to zero, Bitcoin's real-world dominance strengthened further. To that end, the announcements by Coinbase and LedgerX of new institutional custody solutions, the latter in a partnership with Japan's largest securities firm, Nomura, could not be more bullish for the outlook for institutional Bitcoin adoption. To that end, Mike Novogratz, easily the highest profile Wall Street crypto investor, said the only thing standing between new all-time highs is secure, regulatorily compliant custodial products that, voila, are now available. In the legacy financial markets, which few crypto investors pay attention to despite their vital importance toward the cause of Bitcoin adoption, a burgeoning emerging market currency crisis is wreaking havoc with the purchasing power of dozens of currencies. At a time when ominously U.S. interest rates are breaking above resistance levels established 5+ years ago, when the Fed initiated QE and started aggressively targeting price rate suppression. Remember, the failings of fiat currency are why Bitcoin was invented, and now more than ever, its Achilles heels are being exposed in the form of rising interest rates and plunging currencies at a time when debt growth has not only risen parabolically, but showing no signs of slowing down. In a nutshell, Bitcoin's fundamentals have never been stronger. However, fundamentals don't always correlate with near-term price movements, particularly when non-fundamental factors like the Mt. Gox trust are in play. True, the reasons for Bitcoin's price to remain supported at current levels are extremely strong. However, there is no way of knowing what will happen in the short term, as we have learned countless times in the last 2 years. In my view, the bear market lows were indeed established in early February. But in the big picture, there's no way to be sure of anything except in hindsight, whether you're the world's best fundamental, technical, or sentimental analyst. All these methods are arbitrary and unproven. So in reality, all one can do is use all three to come up with a mosaic of likely outcomes and act accordingly. On a personal basis, I am determined to focus less on things I have no control over, like my perception of FUD and those I perceive to be spreading it, and instead on the best fundamentals Bitcoin has ever had, at a time when its Mayer multiple suggests it is as undervalued as at any time in its 9-year history. Not to mention a market cap of like $160 billion within a $3 trillion legacy financial market. Sorry, $300 trillion legacy financial market environment. Well, anyway, thanks very much and have a great crypto day.